Hello, everyone. Welcome to Smart Investing. I'm Albert, and today we're going to be going over 5 bank stocks or 5 banking services sector stocks. The other industry that is related to this also is the consumer lending. So, again, they work as a bank and they make money on loan rates. So, again, 5 stocks. Similar sector. So we're gonna begin with the first one is ALTA ALTA. This stock is actually delisted as of I believe late September. So you can see here September 30th going into October. So this company at 834 million. And one would think just because stock market was going up, you know, right in October, right around here. Well, you could say late September, but still, throughout most of the year, it's been pretty bad. So, for some reason, this stock is delisted. But by the numbers before they got delisted, uh, it looks okay. Let me look at the 5-year chart. As you can see here, it wasn't bad. But again, it was still pretty flat even as it went up. So we can see around here it's pretty flat. And then even though it stayed above its previous year highs, you can see right here that it remained flat and then didn't even break out. So props to them actually for doing good for 2021. Hold on, let me see. Let me see something. So actually in 2021, that's when I thought it was for 2022. So actually in 2021, up until like let's say March, stood pretty flat. They weren't going anywhere. So that was pretty much it. And even if this was 2022, uh, it's hard to get higher gains. And then for a company of this size with that market cap, it's even harder to do. And then along with the overall market trend for the year, it's been down. So don't get too hyped about going into, the next bull market coming up like now when things have been pretty outrageous and all these gains have been pretty strong out of nowhere for no reason, to be honest. So come next year, things might be normal again. And when I mean normal, I mean on the stock market, not, in general, in personal situations. But anyhow, they were doing okay, but I guess for the most part, they were struggling years to come. I'm sure they had cash flow issues. And aside from that, it's hard to grow the business. We can actually find out here. So we can see here that, let's see here. Trying to see some news here if anybody acquired them or if they sold shares or whatever. Or, well, looks like they were being investigated as of June 2021. So getting a lawsuit, that's always not a pretty sight. Whether you win or lose, there's still costs to that. So that's not a good sign. So anyways, I can't make a call or decision on this stock. So we're going to have to cancel this one. But just showing you guys just the general info like always. I thought you might see that. So we're just going to jump out to the next one. So Obviously, this stock is not on the list, so we're going to move on to the next one. Next one up is EQBK, Equity Bankshare. So at 37.73, we have here, it looks like they have new highs. I don't know why. I guess because of inflation. As you can see, they still haven't broken their 5-year highs. And for some reason, they have broken out for this year at a high of 34, but it won't take long for it to go back down if it's only a $2 stretch. Now, gonna look at the first page. Obviously, this stock, 585 million, and then as we can see here, 3.4 for earnings. Pay a dividend of 40 cents. It's pretty horrible. Dividend yield is at 1%. They are stable, and they look okay to pay and cover the dividends based on their earnings. So as far as earnings, price to earnings and the evaluation, so general number, we have a 10.8. So undervalued stock. So it is under its fair value. I don't know by how much, but that's what it's telling me. Moving on to some quants. So let me look at the volume. It's pretty low. I mean, at 49,000. Then we have the highest quant rating, which is value, so which is their price, at 6.4. Growth rated that. Coming in second place at a 6.34. Overall rating was a 3 out of 5. Excuse me. So overall rating 3 out of 5. I don't know why. Growth 6.34. And we're going to look at the company estimates. So it looks like they were beating earnings this whole year for 2022. And then as far as 2022, Q4, it looks like it's starting to catch up to them. And maybe in 2023, they might have to exceed their expectations if their earnings are pretty much flat. So sooner or later, we'll see what the outcome is for these estimates coming in for 2023. Now, their debt is at 90%. Now we just want to look at the cash flow. Net income, revenue is not showing me. So balance sheet is at 90%. So 5 billion in assets, 4.64 in debt. Now for the good stuff, which is the cash flow at 102. So we're looking at 203. Sorry, 213. So we're looking at about, let me see, so 13 plus 9. So about 23 million that they're down from. But their net was 52. So right away, half of their net income would just be to pay off their cash flow. So that would leave them with 25 million left over, but for 2021, wow. Yeah, this company definitely struggling. So yeah, that will leave them at 25 million, which is not a lot. So 2021, they have dividends in 2021, then continued to pay it in 2022. So you have 8 cents, and then 10 cents was the last payment for September. So they did a raise for this year. Again, only 2-cent raise. So for this company, I'm gonna say no. I'm gonna say no. They need work. So that's what I have for you. I'm gonna move on to the next one. Next one up is actually TCBK. So TCBK, you can see new highs going into their 5-year mark. Well, I mean, out of the 5 years, 52-week high. Then we have some info here in general. So stock price is at 54.75. Market cap is at 1.8, close to 2 billion. Fair priced stock from what the number is, 52-week high and low. So we have a difference of about at least $20. So that's not bad. Then earnings at 3.6, dividends at 1.2, so not bad. We have here, like I said, new highs. They broke the high from 2021 of 49. And so the quant rating, highest one was growth, 5.67. But I don't understand why would they grow. We want to see a little bit about them real quick. So they're a chartered bank in California. Obviously, California is still a popular state and very populated state. So with TCBK, now we're gonna see the good stuff. So for 2022, their results were pretty much on par with their estimates. So it looks like their estimates are only going slightly higher and slightly higher. Especially the last two, they were similar in number. For Q4, nothing has been reported yet. But again, ever since 2022, those estimates are going to keep getting bigger and bigger and bigger. And so it might be harder for them to catch up with those estimates. It's not showing me debt. It's probably lag or something. So anyhow, net income is at 117 for 2021. It's not showing me that. So for the balance sheet, 88%. Again, we have 8.6 assets, 7.61. Still too high for, debt in general is pretty high. But again, for a typical bank stock, it's normal because they operate on leverage and they operate on those high returns based on those loan rates, those interest rates. Cash flow we have here at 132. Hold on, that's not the final amount. So we have 132. Then we have 883, 850. So this company is definitely cash flow positive. Nice, good sign. Now it's just a matter of beating their earnings and accumulating shares and investing into the company. Now for Let's see here. Okay, now for their dividends, looks like they raised it in 2022 from 25 cents, and they paid most of 2022 for 25 cents, and then last payment was in September, and then that was for 30 cents. So there you have it for that stock. And in 2020, they paid 22 cents, so that was a slight raise, just a 3-cent raise. Pretty decent compared to other banking stocks, so that's actually not too bad. And again, this company can grow somehow, or I don't know what's going on with this company. Look at some news real quick. Any takers? Any big time investors here? Sorry, I was trying to scroll down to see any news. So it's never there's no really tell. Can't really tell. There's no telling as to any big companies are looking at the stock, want to be interested in it. So overall, for that stock, uh, it's hard to say. I'm gonna leave it blank. I can't say yes or no. I'm neutral about it. So I don't really give neutral ratings because I usually lean to a yes or a no. Um, that decision is actually very, very uncommon, but I think I'm gonna start making it more common. Um, just because uh, it gives you even a better understanding um, as to say, either yes or no or be neutral about it. So I'm going to leave it blank and I'm not going to give it a decision. So we're just going to move on to the next one, which is SYF. I used to have this stock years ago in a personal portfolio, but as things changed, and have they changed? Yes. So I think it's still a good company. Hopefully, we'll see. We're gonna get right into it. Volume is at 5 million, so very active stock, very liquid. $35.19, very affordable. So for market cap is at 15.85, so that's 16 billion. 52-week high and low, so that's not bad. And then the earnings are pretty good. PE is showing me it's very, very undervalued. So you're definitely getting good value for this stock. Now for dividends, not even a dollar. Dividend yield is at 2.61. So we have outstanding shares at 450. Shares available. So that means about 3 million were bought. Now we're looking at the charts. So we had two double bottoms here at about 28, and then it bounced back to about the high 30s, 39. So now we're gonna look at the last 3 months. So that was a pretty sharp turn there. So it went from 36 to 39, and now back to 35. And that was only in the span of about not even a week for this drop. And it looks like a sharp drop just comparing it for the 3 months. I guess it's not as active as it looks when it comes to price range. So now we're going to look at the analysis for the quants. Now, highest rating is the value, which I said earlier. It's very undervalued, so you're getting a really, really good price for it. Quality is at 7.02. I think it's a little bit better than that. The growth, I'm not too sure about. That's something you will have to look into. As far as income, I give it slightly higher, more in the 5 range. It's not like the best, but it's pretty decent. And then for momentum, it's hard to say because the stock is really active, so people do like it. And then they do pay dividends. So even though they're pretty small, they're somewhat small going into a medium-sized company. So as you can see here, for a 15 or $16 billion company, uh, again, with the volume and with the range for the year, and then also you're getting that value, this is a pretty good stock. So it'll be a shame to actually miss out on this, just because it's very, very active. And then, as you can see here, for 2022, they've lowered their estimates. Wall Street has lowered their estimates, and then their actual results have been getting lower too. So for some reason, I don't know if they announced their numbers or their margins or anything, but it seems like their numbers are getting lowered for their estimations. So I guess that way they can beat it. But it looks like the company is still doing okay. So again, they're not struggling too bad. I know for the year, obviously the stock market's in a downtrend. I think that's the only struggling that they have. But other than that, I think this company will do just fine. ROA and then ROE. I'm gonna look at the yearly. So ROA, we have here 4.4. So ROE has actually done tremendous in 2021. Again, I have nothing for 2022, but just to look at that and see if they can, you know, muster the storm and kind of hold on and not, face bankruptcy or, face any financial situations and, these bad times. So we have here net margins. It's not showing me their debt is at 85%. And again, the reason why this is a good company, they're not a bank. They're actually a consumer lender. So I'm sure this company is more local, and sure, uh, they're more of a community uh, based place. I mean, they might be, nationwide, but typically, you know, you're not gonna find a local office for consumer lenders. Usually, that's not the case. But anyhow, 2021 seemed to be their best year out of the last 5 years. I wouldn't be surprised if it was the best out of the last 10 years. So for the balance sheet, at 85%, they have 85% debt, but then 82 billion in debt and then 95 billion in assets. Now for the cash flow, that's where the magic is. That's where all the goodie bag is. So gonna add up all these numbers, see what's going on, and see is what's what. Uh, they're slightly negative in cash flow, so we're talking about 3 billion. So they've got work to do. I mean, they've gained 4 billion. So even if they were to take or use this for the cash flow, which I'm sure they did, you have a little bit over, a little bit over 1.2 billion left over. I'm sure that could buy, obviously, some stocks and repurchase plans and all that. And obviously, they can look out for investors. But the thing is that uh, they still want to grow in a tight environment because that's actually the best way to capitalize on growth. But to each their own. We're gonna see what happens if they're is any news. We'll go for that for last, but we just want to see what happens with that. So dividends is at 23 cents. Uh, in the past, they've been stable, paid 22 cents. So slow increases. In 2018, they paid 15 cents. So again, very, very slow increases. Very, very stable though. Company. Again, consumer lender. So they provide a range of loans, small loans. I'm sure that's what they specialize in. So they even work with established retailers, and it says local merchants, manufacturers, buying groups, industry associations, and healthcare service providers. The revenue is managed through three different sale platforms. So retail card payment solutions and care credit. And again, they do have a bank called Synchrony Bank. So I'm sure that's under their division or under that branch for corporate, and they are insured as a bank, and they offer the same, services that a typical small bank would do. Obviously, not as big as other banks, no JP Morgan or anything, but these small debt loans can go a long way because it's just more suitable for the overall consumer. So I'm gonna look at the news here real quick, and then we have here. So they do work with retailers. So Belk and Synchrony, they trying to expand financing options. Uh, have here. So credit card delinquency rate inches towards pre-pandemic levels. So let's see what else with any news with this. So SYF is maintained at a buy by Citigroup. That was in October. So Citigroup obviously likes them, bullish on it. Just a slight short-term bull run because a $2 range, that's pretty much nothing. And we have here some heavyweight names. I mean, Goldman Sachs. So they're betting on target price to $40 from 35. So that's actually a little bit better, and that's still achievable. So anyhow, they got some big bank names backing them up. And the last one we have, so for that stock, SYF, I'm going to say yes, definitely. And then we're going to leave the last one, which is QFIN. We're going to leave that one. EQBQ, real quick. So yeah, I said no for that one. And then, so QFIN 360. Wow. Gonna look at the past 5 years. You can see on a downtrend ever since 2021. So earnings per share 4.6. Small bank. They do qualify for the 52-week high and low, and the volume. So very, very active stock. Good for day trading and short term, but the PE is very, very low. Just, I mean, aside from the market cap, and if I didn't look at the price or anything, obviously you would consider that a growth stock. But they do pay dividends. Their shares are a really big amount, so they have 155 million shares. That is definitely a high amount. But out of the outstanding shares, 116 is what is left over. So that would be a difference of about, let's say, so 40 million shares that are acquired. So we're talking about 40 million shares. That's a lot of shares. Um, that is definitely movement on the stock that would be on a day-to-day basis. So we have uh, fundamentally it's okay, but to move this stock higher, it's gonna take some serious movement from big names. So financially, the stock has estimates going lower. Sometimes they beat their estimates. From the looks of it, it looks like in Q4 2021 they beat it. 2022 Q1 looks like they did fine. Q2 looks like they missed, and it looks like it's going flat for their estimates. But again, uh, they're gonna need some serious potential from big investors to kind of get this going as a longer term stock instead of a short term. It looks like a day trading stock. You can see that earnings have been dropping quarter to quarter, even annual. These last years from 2018 to 2020 has dropped down. 2021 they were just bailed out. Obviously in 2020, that was definitely a good year and things were like on the up. And then 2021, obviously things were going up as well. Everything was on an uptrend, but that's a different environment now. Now, as for debt, 54%. I'm surprised to see that. So, let's check if this stock is actually a bank, which I don't think they are. But we're gonna see what happens. Their margins are pretty high at 34%. It's pretty high. I don't think they're a bank. They've got to be like a consumer lender or some kind of a local bank or something. Net income has grown fast and pretty high. We're talking about triple digit gains. I mean, these are like growth stock numbers. Pretty insane. And I know the market cap is low, but past 5 years they've been growing. Revenue has, these are like growth stock numbers. So, in these charts, everything, they've been pretty almost doubling. Yeah, these are growth stock numbers. So, again, it's hard to justify how this stock is gonna play out. They have good numbers for it to be financially stable, even fundamentally. But on the technical side, it's weird. Like on the technical side, it looks bearish, but from the fundamental side, it looks bullish. So how can you decipher that? How can you decide that? So we're gonna look at some quants. That's not the main decision, but we want to look at cash flow real quick. That can tell us way more. And again, I'm surprised at 54% debt. So we have there 6 billion. So they're definitely cash flow positive. So they're basically above 2 billion or more or less about 2 billion in cash flow. And that's because of those shares, those acquired shares. So, that, I mean, it's a good thing and a bad thing. We'll look at their dividend history is fairly new. So, even from 28 cents to 26 to 22 to 18 cents, they're starting to lower the dividend payments and do cuts, which I understand, very understandable. it's not that they're doing bad. So I assumed, again, they're not a bank, they're a consumer lender. So this is a Chinese company, or if it's not, it listed on the U.S. Major markets, but their corporates are in China. Um, the company, I would, it's hard to say. Um, I'm gonna give it a no decision, leave it blank, because again, like I said earlier, fundamentally it looks good, it looks bullish, but on the technical side, it looks very, very bearish. So again, we have to see what will happen in the news and see any outcome as to dividends increases and a little bit more in their market cap. I know that's going to be hard to do, especially in a downtrending market, but this company needs to be investigated a little bit more. Again, this company has a lot of potential. Um, I think honestly, what they should do is, I think they should stop paying the dividend. That's what I would do. I'll stop paying the dividend, continue it as a growth stock, even though the volume is still pretty high. And then when the volume starts to lower a little more, then you can figure out and do the dividend payments, and then you know if they still want to do it quarterly or whatnot. Because again, this is a giant mess that we're in. Because again, throughout the whole year and everything, it's been pretty much a downtrend. And again, U.S. doesn't favor Chinese stocks, and then Chinese stocks don't want to favor American stocks. So it's a little game that they're playing, and you don't have much investment as you want to. So then it's like you're picking sides, and we don't really want that. So when there's more stability and more confirmation as to how we're dealing with China on relations, and then also on a serious business level, then this stock can be further established and stuff. But that will be my take on it. Um, it'll be lovely to have it on a watch list. Um, Maybe next year, but for this year, I'd say no. But again, that's why I give it a no decision. It's tricky. It's tricky. Um, there's slightly more positives than negatives, but um, yeah, we're just in a tricky environment. So just gotta wait how things play out. So that's all I have for you. I know I talk too much. I like getting information out there. So again, no decision for this one. Um, if you guys want me to do a deeper dive, I don't know, maybe another time. I'll definitely do that. But for now, that's all I got. So thank you guys for watching. I'll see you guys in the next one, and stay tuned. We have way more bank stocks to go, and hopefully we can end this sector. So again, I'll see you guys in the next one.